What is up, you guys? Pete DiCarlo here, and today we're going to do an update on Facebook. So I talked about Facebook not too long ago. I did take a couple of trades from 320 up to 350, and so far we've really just been kind of sitting sideways within this bullish wedge. So I want to talk about where I see this thing going. We're going to go over the technical analysis, and ultimately if I think we're going to get back up into the 380s to potentially even $400 in the next couple of months, or if we're ultimately going to sell back off to the 250s, guys. I hope this video helps. Hit the like button, subscribe, check out our Discord. It's completely free. The link is in the description. You guys get access to tons of free courses, live streams, seminars, webinars, and on top of that, the best unusual options bot out there. You guys get access to the same exact unusual flow, same exact dark pools, and same exact heat maps that I use on a daily basis. It's a $200 a month product that we pay for, so you guys have it completely for free. Go ahead and check it out, guys. Thanks for all of your support. The link is in the description. And let's take a look at Facebook. So looking right now at the last 5 years of Facebook, you can see that the stock really has done nothing but go up. You know, of course, we have had a lot of volatility and a lot of moves to the downside within that time frame, specifically in 2018 from July to basically the bottom in December, when the whole market kind of had that skid, as well as the coronavirus pandemic, the beginning of it back in January of or back in February, I should say, of 2020, down to those lows in March of 2020 before bouncing. But ultimately, we've been riding up this major trend support for a very, very long time now. And if we zoom in here, you can notably see that we have a lot of great setups here. We have big volume within the area that we're in right now. We have this good, strong trend line moving its way up. And we also have this bullish pennant right here, which you can see forming. Now, we're also holding this Fibonacci level right here. We held this 61% fib and the 50% fib here from that most recent swing high, swing low. And you can see that so far we're looking pretty good. We have a lot of confluence, good volume, holding supports, looking very nice. Now, the one thing that I will say is, looking at this RSI, we are ultimately curling down this week, but with a good push in the market, potentially we could start to see this move back up. The MACD was actually looking like it was going to cross to the upside, and the TTM all the way at the bottom of your screen here is squeezing. The pro is squeezing, but it's not very, very tight of a squeeze. It's not like when we see all this red and all this orange over here. So looking at this so far, it's looking like we could see a breakout or a major breakdown pretty soon. And of course, looking at this pattern, if we were to actually go ahead and break out, we would need to see this move up above $360, and we would need to see this hold $360 for potentially a week before we could see a big breakout up to 390. If we don't do that and we snap down and we break 304, we are definitely seeing Facebook move down to $253. So it seems that within the next 3 to 6 months, a sizable move of about 20% to either side will most likely happen. Now, looking at this daily chart here, so you guys have a little bit more of an ability to see a smaller time frame, even though a daily is a big time frame. A lot of volume, point of control holding where we are right now, and I want you to notice where the head of this breakout is starting to reside: on earnings. So earnings is going to be, I don't know if it's actually confirmed yet for February 3rd, but it will be between this time frame of like the 26th and the 5th of February. And you can notice that this is right where the head or the apex of this bull pennant is. So the way that I like to explain a bull pennant is kind of like a pimple. I know I use this a lot, but it's one of the best ways to explain it, is that your head of your pimple is right here where the squeeze, or where this, whichever the wedge, whether it's a bullish wedge, bearish wedge, it's all going to be within this range. But you have one resistance acting basically, as it's going to be discussing, but as one finger squeezing this pimple. Then we have the other support squeezing this pimple until all the pus squeezes within this head of the pimple, and then we have a breakout or a breakdown. Now, most of the time, a bullish pennant, which is what you are seeing here, or a bullish triangle, is basically setting up to be a continuation pattern, which just means that whatever the trend has been before, we should continue within that pattern. And a great example is back here, back from August 17th of 2020 to March 8th of 2021. Same setup, big ascending triangle on major support, holding this trend line. we had this squeeze that was occurring for a bit here. And then, of course, we had this major breakout that we actually ran, a massive rally. It did take a while, but a massive rally from March 21st, 2021, all the way up to September of 2021. So about 6 to 7 month rally of a 50% run. So traditionally, this is what we would be looking at. We would be expecting a potential breakout. So the way to play this, right? Of course, economic landscape and fundamentals of the market and everything are important as well, but a couple of ways to play this. Number one, for me, best entry is down here at like between 318 and 310. This for me is my best entry. I'd be looking to set a stop loss down here around, let's say 290 would be my place to set a stop loss. And then my place to take profits. Actually, I'll use this long position. So let's say we were to enter here at about 315 and our take profits would be all the way up at 385. And our stop loss would be down here at about 280, let's call it 288. Because if we break this lower low and we move down to 288, like we're definitely going to be moving down considerably further. If you look at this with a take profit of around, up here at like 388, 390, you have a potential profit of 22%, right? And you have a potential loss of 8%, which means our risk versus reward ratio is 2.75. I like to look for a 3 RVR, and that's basically what we have right here. So personally, I will be keeping an eye on this. I did have a position on this throughout the week, which I did end up closing. But overall, I really do like Facebook. And I think over the next couple of months, as long as we can hold these supports, we should do fine. If not, I will be looking to take my stop loss and then potentially re-enter down at 231. I hope this video helps, guys. Hit the like button, subscribe, check out our Discord. It's completely free. If you want, you can upgrade to our premium where you get access to all of my trade alerts. Last month, we made $11,000. And so far in the first week of January, which has been a rough week, we are up almost $4,100 in closed profits, not just up. Like we've actually closed those profits in. Thanks for all the support, guys. Have a great day. Peace.